Our perception of money is changing rapidly, and banks are at the center of all of it. From how we access it, to how we buy, to how we trust that that money will be there when we need it. I'm Kiah Haslett, the creator of FinTech Takes Banking. Here on Bank Nerd Corner, I talk with bankers, economists, academics, and more about the complex dynamics shaping the financial services landscape. This week on Bank Nerd Corner, I'm joined by Bernadette Ksepka, Senior Vice President and Deputy Head of Product Management for the Federal Reserve System's FedNow service. The Federal Reserve Banks developed and launched FedNow, a real-time clearing and settlement service that supports instant payments in the United States in summer 2023. Bernadette shares with me her observations about how the first 3 years of the network have gone. The network is growing, but has only connected to less than a quarter of total financial institutions in the country, which represent about 50% of deposit accounts. And many of those institutions are receive first, even though Bernadette says adding send capabilities is where most institutions see a return on investment. But a variety of use cases are popping up, which may drive broader future adoption. We also talk about the adjustments that financial institutions need to make so they can be successful, both when it comes to implementing instant payments, but also in managing the accelerating pace of change. Hi, Bernadette. Thanks so much for joining me today.
Hi, Kiah. It's great to be here.
Well, I am so excited to speak with you because I reflect all the time about how technology is changing so many aspects of financial services, money, and banking. And I think one of the ways is it's speeding up everything. And payments are very entrenched in our financial services system, and the Federal Reserve has played a large role in facilitating payments. And obviously, the launch of FedNow several years ago was a really exciting development. So I wanted to speak with you and learn a little bit more about how FedNow has grown and is being adopted, and then to think about the maturation of this payment rail. So tell me a little bit about yourself and what you do at the Fed.
Sure. So I am Bernadette Ksepka. I'm with Federal Reserve Financial Services. I am the Deputy Head of Product Management for the FedNow service. So I have responsibility to drive the product roadmap for the Fed's instant payment service. I have been with the Fed for over 20 years and with FedNow since really the very beginning.
So tell me a little bit about, the Fed's overall payment services and where FedNow fits into that.
Yeah, so the Federal Reserve has been providing payment services for over a century. Our role is to ensure that the U.S. payment system, it's safe, it's efficient, and it's accessible for financial institutions and ultimately for the public. Think of us as the interstate highway system, but for money. So
I love that analogy.
So the Fed builds, right, and maintains the roads that the banks travel on and to move money around the country safely and efficiently. We operate a few key services that really supports this money movement across our economy. So that includes Fed ACH, you have FedWire, you have check, and then we also provide some cash services. And then the newest addition to our payment services is the FedNow service that we launched back in 2023. And that really allows financial institutions of all size across the U.S. to provide instant payment services to their customers, right? And that could be either businesses or consumers. We developed this infrastructure in response to a clear market need. We found that there was a growing demand for faster, more efficient ways to move money. We all know how frustrating it can be, right? When money doesn't move as quickly as everything else in our digital lives. And maybe I'll talk through, how is FedNow different than some of the traditional payment rails. And we focus a lot when we talk about instant payments about the speed, right? The name itself kind of implies it, right? But it's not just about the speed that makes the network so valuable and so different. First of all, it's 24/7. It's the only Fed payment rail to be offered around the clock. There's also finality. So there's no clawbacks like you have on ACH. You also have confirmation of funds and transparency. So you know exactly when it settles. There's no guessing. If I sent money to you, there's no guessing if Kiah received it or not. Like I would know right away. And then lastly, which I think is really important for businesses, is that it allows for a lot of data richness. So that makes reconciliation really easy. And all of these things is what's really bringing payments into the 21st century and aligning with that always on expectations that customers have.
Yeah, that's really interesting. And I really think about how money moves in people's head and versus the experience people have with money. And actually, why does it take quote unquote so long for a payment to settle, and to understand that when we build new payment systems, those things we should be revisiting, right? And in my head, money does move finality, like there is finality on it. But the experience of payments, I think up to this point or up to these where payments are getting faster, that can be a big adjustment, and that can feel like maybe a little unsafe and like a little risky. And there's almost like kind of an adoption or mindset shift that needs to change with some of these consumers, which I think, or banks, which I think is, part of now the adoption cycle of it. So we're coming up on like 2 years, or sorry, almost 3 years. Summer 2023 is when FedNow launches. How has the network gone so far?
Yeah, so it's been 2.5 years since go live. It's really hard to believe it's been that long, but it feels like we were just hitting that launch button not long ago. But, honestly, we are pleased with kind of where we are for a new payment system. The numbers tell a good story here. So transactions are growing. We have more than 1,600 financial institutions that are on board. There's new banks that are coming online every month, and the system is healthy. It's resilient. And every time a new bank joins, more consumers and businesses across the country are getting access to instant payments, which is super exciting. So this means that, someone can get their daily wages at midnight on a Saturday instead of waiting until Monday when the bank opens. Or there could be a small business that can pay a vendor immediately instead of waiting days. With instant payments, I truly think that we're solving real life pain points. And that's what it's about. It's about real people getting their money when they need it, and that momentum just keeps building.
Yeah. So can you talk a little bit about kind of some of the growth that you expected to maybe see at this point, some of the trends you're seeing, maybe like what kind of institutions are signing up? And then, I'd love to dig into some of those like use cases a little bit more. But yeah, what are you seeing overall as far as like, where did you expect to be at almost 3 years relative to where you are today?
Yeah. So maybe to put this into perspective, our volumes have grown 450% year over year. So that's from 2024 to 2025. So that's really big growth. Again, as I said, we have 1,600 financial institutions. We also have almost 50 service providers that are certified, which is really important because they help enable a lot of the smaller institutions in the US. With the 1,600, that means that we're able to reach about 50% of what we call demand deposit accounts or DDA accounts. And that means that we can reach about 50% of the end consumers in the country. And that number is continuing to grow. I think the one of the best features of our participants is the diversity. So we have financial institutions from all 50 states, 95% being community banks and credit unions who are offering instant payment services to their customers. And they're doing this alongside some of the largest financial institutions. So I think this really speaks to we are meeting the needs of the entire banking ecosystem, right? Everyone wants the same access to safe, efficient, resilient payment options in the US. I expect that our volumes are going to continue to grow as we enable more use cases. The absolute numbers, they're still developing, but the growth trajectory is really positive.
Yeah. And you mentioned, how and why instant payments is useful to like pain points and end consumers. Can you give me some examples where, like I'm not writing checks these days. I don't use a lot of cash. Payments moves 2 to 3 days, but why would I need it to be instant?
Yeah. So, I mean, I think if we think about our daily lives, it's pretty wild. So you can stream a movie in seconds, right? You can request a car ride to wherever you are. You can get a package delivered in sometimes hours. But when you're moving money, say, between your savings and your checking account, and if they're at 2 different banks, it could take days. Or if you're paying a new biller, it could take over a week. Yeah, we do have P2P apps, and that could feel like you can get money to a family member instantly. But even if
it does feel instant, that interface, yeah.
It does. But like if you try to move that money out of the wallet, right, defund your wallet, that could take days as well. So we are a platform for innovation. We are use case agnostic. So that means that financial institutions can enable any use case that they can imagine on our platform. Some of the things that we're seeing right now are digital wallet defunding. So lots of different wallets. So imagine like a brokerage wallet. You make investments and then you want to take money out of the wallet instantly. We're also seeing a lot of off-cycle payroll and earned wage access. So this is really helping people access their money when they need it, right? Not just on traditional paydays. So for working families, for example, imagine getting access to your paycheck when you actually need it, right? So not having to wait until Friday if your rent is due on Wednesday, for example. We are also seeing a lot of use cases around major life events. So like buying a home or a car, that waiting game that usually existed in those transactions is disappearing. So the first thing is you don't have to run to the bank to get a certified check or initiate a wire, right? You can, there's more flexibility there now. And home buyers can send an escrow payment instantly, or if you're trying to buy a car, you can drive off that lot immediately on a Saturday because we're able to send the auto loan funds instantly to the dealer. So I think those are just really great examples of real life use cases. There's one also that I wanted to mention that, I think really hits home for me, and this is around emergency relief payments.
Sure.
So last year we saw the first federal emergency relief disbursement that came through FedNow, and that was enabled by the U.S. Treasury's digital pay program. This is a huge game changer. It's huge. If I think back, I guess it's been about 13 or so years ago, there was Hurricane Sandy in New Jersey. There was just a lot of uncertainty, and I think this really drives home for me how critical speed is in those moments, right? So families who have disasters and need payments, they need that money for gas or food or temporary shelter. And this isn't just about banking innovation, but it could really be a lifeline when it matters most for people.
Yeah, you were talking about buying a car on Saturday, and I always had this gripe of like, why do the payment computers get the weekend off? Like, I did not realize the payment system needs a break. And, some people said like, it's for float or revoke, they explained, I think, kind of back-ended an explanation into the time that existed. And they were like, well, it's actually good but you're right. Like there are these moments where not every payment needs to be instant, like instantly debiting my account, instantly crediting my account. But there are times where like the most important thing about that payment is its speed. And, you mentioned that it's use case agnostic. I was spending some time on the FedNow website and looking through all the use cases. And it was interesting that it was, I have a friend in insurance and I'm like, please stop writing checks. Like if the insurance industry just stopped writing checks and they got those payments out, the disbursements, Nashville just had a big ice storm. If you were getting that payment out fast, people might be out of their house for a week, right? Like the mail is not moving right now. Yeah. But I was kind of struck by like this adoption of like the bank needs to sign up, and then the bank might need to recognize the payment needs of their clients or the payment needs of their customers. So the Fed can kind of build the road, but it's almost like the bank has to give the car to the customer in order for them to use this road. So can you talk a little bit about like how, what are you seeing with adoption, like kind of flowing downstream of FedNow just merely existing?
So let me talk about maybe both sides of the coin here, because you need financial institutions and businesses. So the 2024 Federal Reserve Financial Services research shows that 66% of U.S. businesses say that they're likely to use instant payments if their financial institution offers it. And then you also have businesses saying that those who are using instant payments are reporting 10% higher satisfaction with their financial institution. So how do we get more businesses to adopt? And I think it comes down to they need to understand the value proposition. So as a business, what's my value proposition for using instant payments? And I think there's several things here, right? So first, cash flow improvement. So no more 2 to 3 days waiting for cash. There's a lot of reconciliation efficiency. It can reduce just accounting overhead, for example, because those payments are so rich with data. There's better customer experience. There could be faster refunds for your customers. There could be immediate payment confirmation. For a business, it could also mean lower processing costs with instant payments versus other rails that they might use. Fewer chargebacks, and the list just goes on.
Yeah.
So just a wide range of benefits that businesses can take advantage of. So maybe let's talk about the banks and what does the advantage look like for them. I think a lot of banks are discovering that instant payments aren't just a nice to have feature. They're becoming essential to staying competitive and meeting those changing customer expectations. I think banks are realizing that this could be a really powerful retention tool. There was one community banker that I was recently talking to, and he talked about FedNow helps him punch above his weight, essentially, right, against larger competitors. And then there's new revenue streams here. So businesses are willing to pay for the services and all those benefits that I talked about, right? So better cash flow, better operations. So there's definitely a revenue stream opportunity here. And then third, I think banks are recognizing that there's cost saving opportunity here. So with instant payments, there could be less exception handling that could translate into less customer service calls, for example, since there's immediate confirmation and someone may not need to call in and say like, what's the status of my payment, right? But so at the end of the day, you have benefits for businesses, you have benefits for financial institutions, but we need both of them, right? So you need both sides of the coin to really create that value.
Yeah, me personally, I've been writing about competition for commercial C&I, small business, small and medium business clients that banks currently have, and that, these many entrepreneurs or business owners, they start a business not because they love accounting, love reconciliation, love doing the financial side of the book. It's because they really they have an expertise in, a small, like their own small business side. And so I think about the money problems, the money adjacent problems that can come from not just like making profit, but like managing the money, reconciling payments, sending and receiving money, being able to accept payment. And, there's this, kind of saying in the bank space about, your customer might need a loan from you every 3 years, but they have to make payments and accept payments every day. Like, and we see a lot of non-bank, tech competition around around these money adjacent money management issues and making it easier. And I just think that, trying to figure out how to like make it easier for everyone to get paid and introduce more finality. And then the other thing was that, I have this like personal vendetta about checks, which I know the Fed still processes some, and that's a different group. But one of the things about checks that I think banks need to think about is, what are the costs of processing a check, including any potential fraud? And I think sometimes when you don't ask yourself, what does it cost for us to have this payment, deal with some of the issues that can come out of the payment, including fraud or stolen checks, or trying to work out the bank of first deposit disputes or whatever, relative to what would it cost for us to offer instant payments? If our commercial client is using or accepting checks, how can we make instant payments a more viable and attractive option, and explain to them some of the costs and benefits that can come from shifting these payment methods, and kind of speak to that, like the cost savings for the bank or the cost savings for the customer, that can kind of come from like just these historic and legacy payment functions that maybe don't. Maybe they're good for me handing a check to someone physically and then them physically or whatever deposit. But, the just kind of these legacy payment methods that are having a couple more costs in a way that like are sort of addressed or totally they step aside with the instant payment setup.
Yeah, I think all great points. And I think all of that needs to go into kind of a business case, right? As
exactly.
As financial institutions are thinking about how to prioritize instant payments, they need to think about, it's not just about the costs of implementing instant payments, but also where there could be savings and efficiencies and customer experience improvements.
Exactly. I was surprised to see one of the changes that FedNow has made since your launch is that you've increased the transaction size from 1 million to 10 million. And as someone who has never sent $1 million in my life, I was surprised to see that someone might need to send $10 million in one transaction. So can you talk a little bit about why you guys made this change to upsize the transaction size, and what does it say about either the use case or the people who are using and really could benefit from needing to send money instantly?
Yeah, so we have that in common. I too have never sent $1 million payment. So when we launched FedNow, the initial transaction was we started with 500,000. We later increased that to 1 million, and now we're at 10 million. And why did we do that? We did it because there was customer demand. There's certain use cases that really benefit from moving large sums of money instantly. So, for example, corporate treasury operations, right? So they need to rebalance accounts quickly. You might need to move money across an institution between different accounts to either make payments or to capitalize on investments. And they're doing this in large chunks. Other use cases could be high value supplier payments, right? So some of these B2B payments are quite large, or they might have emergency disbursements. There's also use cases with large dollar amounts around commercial real estate, and then also payroll funding. So large global corporations, right? If they're funding payroll, those could be big dollars as well. One of the things when we were implementing this increased transaction limit, we wanted to make sure that our participants also had really flexible liquidity and risk management controls in place to help them manage their operations with these larger transaction capabilities.
Yeah, for sure. I would really hope that if I was sending $10 million, everything kind of looks correct, especially with no revocability, the finality of the settlement. But I can also see that I probably wouldn't want that amount to just be hanging out in the ether and waiting for it to settle over a couple of days. So yeah, that seems so far from my head, but more power to anyone who's writing a $10 million payment to send. So I am totally sold on instant payments. And I think anything that the financial system can do to kind of make money act the way it does in people's head, I think is good. And also that is the direction of technology long term. But I wanted to talk about some adoptions that we've seen in the space. You mentioned there's 1,600 participating FIs and 50 service providers. But that's only about 20% of the total banks and credit unions in the United States. How many financial institutions does the Fed want, aiming to connect with? Is it 100%? And then why does the number of institutions matter?
Yeah, so you're right. It's 1,600, and we have about 9,000 financial institutions in the U.S., which is mind-boggling, and it's more than any other jurisdiction in the world. Like no one has that many financial institutions in their banking system. I think the number that matters here is the 50% that I talked about. So we can reach 50% of end consumers, and that will continue to grow. I don't think I'd say that our goal is just a number. It's about broad accessibility, and ultimately we want to get to ubiquity. And payments they're a network business, right? So the more institutions that participate, the more valuable that service becomes, because say your bank offers instant payments, but you're trying to pay me, and if my bank doesn't participate, you lose that benefit. So, that widespread adoption is really key to making instant payments truly ubiquitous. So, we're excited, and we continue to work with service providers because they're really key. They're helping those smaller institutions just more efficiently connect and operate instant payments, and it's critical for those community banks, those credit unions, to be able to offer the same modern payments that some of the large national banks are offering.
Yeah. So what are some concerns that financial institution executives have about, instant payment rails? And what, in your experience, do they need to address, maybe like from a tech perspective or maybe from a talent perspective when it comes to move money instantly successfully?
Yeah, so great question. First, financial institutions need to address the technology, the integration, the operations. Are they going to be connecting directly to FedNow? Or are they going to be working through a service provider? Do they need to make upgrades to their core banking platform? Do they need perhaps new APIs or any changes to their back office processes? So there's a lot in kind of the technical space to think about. Then also, for institutions who want to send payments, there's a number of other considerations as well. So first is thinking about risk and fraud management, right? So as you've said, payments are final, they are revocable. This is a 24/7 environment. Participants need to have really strong authentication controls. They need to have real-time fraud detection. They need to be able to monitor their transactions and so forth. And then we touched on liquidity. Liquidity management's really important. They need to make sure that they have funds available 24/7, not just during business hours. And that could be an operational shift that they need to work through. So I think success really comes down to planning, right? So in thinking about strong risk mitigation, robust liquidity strategies, planning for that seamless integration. And there's a lot of functionality that we offer to financial institutions to help in this area. And all of these things that I talked about are, technical aspects, operational aspects. But I think just as important as banks are thinking about instant payments, they need to work through their market or go live strategy, right? So thinking about use cases, how are they going to educate their customers, thinking about economics, all of those things are important as well.
It's so funny. You were like, if you want to be a send bank, you need to have strong fraud controls and liquidity management and strong risk mitigation. And it's like, oh, I thought all banks needed that. And I do think that there's something really interesting about some of the migration we're seeing with, and again, thinking about how tech is changing banking, how tech is changing banks. Like, whether or not you maybe are a FedNow institution, you still need all these things. And that this is I don't want to say good practice per se, but this is a best practice approach to everything that you would, whether or not instant payments is the thing that your bank is going to offer customers, or whether or not your go-to-market strategy, or how do you think about use cases. This is just good practice for being a bank that is going to be around 20 years or 50 years into the future, right? Whether or not, again, you, the institution, adopt a particular technology. This is just kind of how it's, this is the inevitable push towards digitization that everyone is dealing with, right?
Agreed. This is about future-proofing the offerings to your participants.
Yeah. So what are some misconceptions that you encounter from banks or commercial clients or end users when it comes to instant payments, and what do we need to just fully address before we are all, one, we kill checks, and two, we're all moving to instant payments?
Yeah. So, I think one of the biggest misconceptions that exist is that customers aren't asking for instant payments. There's no brand awareness with your average consumer of, what FedNow is, but everyone wants to be able to move their money quickly when they need it, and for it to be safe and efficient and so forth. I always joke that a few years ago, I didn't know that I needed Amazon to deliver to my house every day.
Sure.
But now it's my expectation, right? And if I can't get something when I need it, I might be upset there. So we're disappointed at least. And I think that's the same with payments, right? So consumers, businesses, they want fast, convenient payment methods. I mentioned the study earlier, and there was another stat in there that younger generations are adopting non-bank providers to meet their expectations. So 78% of consumers choose faster payments as a preferred options, and half of them held banks balances at non-bank providers.
Yeah, like a Venmo or a PayPal balance or something.
Exactly. So if you're a financial institution and you're not on the FedNow service, this is the time to get on board, right? Because you want to retain your customers. You want to keep deposits within your bank. You don't want those balances sitting out in other digital wallets outside of your bank.
Yeah.
And ultimately, customers vote with their feet, right? They might not say, I need FedNow or I need instant payments.
Right.
But if they're making a decision to move their money elsewhere, that should speak volumes.
Yeah, I do think you make a really good point about, and I hear it too, our customers just aren't hearing from us, or we're not hearing from our customers that they want this. And, sometimes I hope that what is not said is that we asked our customers and we sat with them for a day and we looked at, their money management, their payment pain points, and we all came to the decision that it can't, the instant payments isn't the solution to this. And I don't know if that's always true. And again, to think that, you're right, I don't need Amazon to drop stuff off at my house every 2 days, but because it's available, Amazon does it. And Amazon is now setting that expectation for other companies, both in how fast I get things and how much I pay to get them delivered. And I never told those other companies, yeah, actually, it would be really useful if you had this thing that was competitive. I just make choices with that information in my mind, and everyone else has to kind of figure out how are we going to respond to this, right? I don't always know that there's that kind of formal feedback loop, and I definitely don't know if I would cite that as my data that tells me I do or don't need to do something. So something that I have heard about some of the instant payments, and certainly at the launch of FedNow, was kind of the receive first versus send and receive. Why, number one, do those two options exist? Why can I opt into one and then not the other? And then two, I think, hopefully we would get more institutions to do both, send and receive. So, but how is the Fed kind of working with the banks or the credit unions that have started in receive first and then are moving them over to the send and receive?
Yeah, it's a great question. So when institutions join FedNow, some of them start as receive only, but I actually like your label better as receive first because
I saw receive first on the Fed's website, so that's why I'm using it.
I like it because I think it's, that means that there's intention to move beyond kind of receive, right? So receive first, it's the easiest way to sign up for the service. And it's really a good way to get your feet wet with instant payments before moving to send. But send is where the return on investment is, and I'll touch on that. But receive first allows banks to accept instant payments without a lot of major changes to their internal systems or customer interfaces. And in many cases, we've seen that as soon as we turn a participant on the network, they start receiving payments for their customers right away, which is awesome. Making that shift from receive first to send and receive, there's definitely more things for the financial institution to figure out. So they need fraud controls in place. They need to have a front end or a digital experience where their participants are going to be able to initiate those payments. So it's a bigger step operationally speaking. But with that said, I think we've seen some really promising progress in this space. We have more than a third of our participants who are enabled for send, which is really encouraging. And then there's ways to start sending where maybe starting to ease into it, right? I think when financial institutions think about send, it just seems like a really big thing, but there's a way to kind of start or phase it in, I would say, right? So you can start with a limited customer segment, for example. So maybe starting with your business participants first before you enable other types of participants in your bank. And send is really what's going to drive that ROI for financial institutions, where it can enable, additional revenue that I talked about earlier. It can improve that customer experience. It can really help to retain customers. And as you said, ultimately the goal is for banks to be both send and receive and give their customers the full benefit of instant payments.
Sure. So you mentioned fraud and the need for some real-time monitoring of fraud, which again, I think you need that whether or not you do instant payments, the way fraud is, kind of transmitted in our financial services system. But definitely instant payments with the speed and the irrevocability of the payment itself, that you really have to do a lot of the work on the front end to make sure that there's high confidence in the payment. Can you share some fraud-specific areas that FedNow has addressed, both within the network and what that experience has been, as well as what has been useful for participants, maybe again with this payments area, but also just thinking about fraud, the nebulous nature of fraud and banking?
Yeah. So I agree with both of your points, right? So fraud isn't unique to instant payments. And it's something that every rail should be thinking about and has to address, right? But also agree with your point that it's the speed and the irrevocability of instant payments that really probably heightens people's concerns about fraud in general. From a FedNow perspective, our participants have stated that they have not seen a lot of fraud on the rail. In fact, if you look...
That's really good.
Yeah, it's great. I think that's really encouraging. And in fact, if you look across the rails, it's actually our slowest rail, right? So traditional check is where we're seeing the biggest fraud concerns right now. But with that said, fraud remains top of mind for financial institution, and that's for good reason here. And I strongly think that the best defense against fraud has to be multiple layers of safeguards, right? So you want to prevent the fraud from occurring in the first place, and then you need ways to detect it if it does happen, and then we need ways to mitigate the financial reputational impacts of fraud. And there's a lot of players in the payment kind of value chain, and everyone has a role to play in fighting fraud is my view. So we as a network as an operator, we ensure that our network is secure. It's our highest priority. We offer a lot of complementary tools to our participants so that it can complement what other existing fraud mitigation tools that they might have. So we offer things like being able to customize their transaction limits. There's a negative list, so they could put either accounts that they don't want to send to or receive from on that list that we would scan against. We also offer configurable value and volume thresholds. So this helps kind of detect any unusual activity. And then we also recently launched a batch-based payee name verification capability, which again is another complementary tool for financial institutions. I'm super excited, though. We have a capability that's in pilot right now. We call this a network intelligence API. And it's basically going to offer financial institutions more information about the receiver so that they can make, risk-based decisions on additional information. So as you said, risk management, this is going to be an ever-evolving area. I think this is an area where the entire industry needs to continue investing. And, as those fraudsters continue getting more sophisticated, we also need to continue building out our controls and working together as an ecosystem, sharing information, and just staying ahead of all these emerging fraud trends.
Totally. And thinking about, how technology is changing banking, the speed of banking, this feels like really good developments overall. But I understand why it's so important to apply them to a tangible thing like an instant payment, right? Like to say we need to make these investments because long term, this will help us mitigate fraud and bad actors and keep, make sure that people aren't sending money to scammers or banks aren't taking losses on fraud or getting ripped off or whatever. But you kind of do need to say and we will apply it to this use case right now. And then once it kind of proves that it works here, we can expand this, or we can try to put more customers or accounts into this framework and take our learnings and benefit with the entire bank. So, but again, it's almost like the instant payments is the catalyst, right? It's like the reason why we need to make these investments. So, I'm thinking about how there's probably not a lot of commercial business owners that listen to this to this podcast, but there are a lot of bankers who are maybe thinking about the speed of payments increasing, competitive pressures, but they might not work. Their institutions might not be signed up for FedNow, or they might be received first. What advice do you have for those listeners who are thinking about the future of banking, thinking about the future of their bank, and how could they, start maybe working internally to convince their management teams to kind of invest in this space, be more curious in this space, and think about the holistic payment offerings?
Yeah, so you're right. There's many businesses that are excited about instant payments, and I spoke about some of that demand earlier. But adoption really depends on their financial institution or their service provider being ready and enabled. And in some cases, we've seen some corporates, some fintechs find new service providers or new banking partners to be able to move forward with instant payments. So, think about that. You don't want to give your customers a reason to look elsewhere for new partners because you're not offering instant payments. What I encourage corporates and fintechs is to really express their demand to their financial institutions. I earlier talked about the misconception that financial institutions are saying that they're not hearing about that demand. You want to make sure that your bank knows what you need, what use cases you're looking to enable. And that's really going to help that financial institution make that business case, right? They need to put together a business case to get the executive buy-in so that they're able to prioritize this on their roadmap accordingly. One other option, that might be attractive to some fintechs and corporates who might have a sponsor bank. So they might be working with a sponsor bank, but we also offer what we call on behalf of capabilities, or OBO capabilities. Okay. And this allows, again, a corporate or fintech who has a sponsor bank, but this might be a way to more efficiently kind of originate these payments directly to the service. And if there's, any corporates or fintechs that want to further talk about that, we'd be happy to do that. The other thing maybe I'll mention is that there's a capability that we offer on our service. It's called Request for Payment.
Sure.
And this is, the ability for a corporate, a biller, it could be an individual. They send a secure message over the network and it's requesting payment. So if I get that request for payment, I can then respond and initiate a push payment in response. I think there's tons of use cases here, right? So, imagine that plumber comes to your house, and they do a service call. And then usually what happens at my house is I start fumbling through my drawer to look for my checkbook because they only take check, or they want to charge me if I use a credit card. So in this case, they could initiate a request for payment, and then I could hit yes on my phone and pay it right away, and he can be, or she can be on their way, right? There's just lots of improvements for better customer experience, better reconciliation for that small business owner. And, I think a request for payment at scale could really be transformational. But we kind of talked about kind of the, chicken and egg problem that we have in the industry. And I think that really exists with request for payment as well. On the biller side, the commercial side of banks, there's just a ton of interest on this. But on the retail side, so that's the side of the bank who's actually getting the request for payment and then has to process it, there's some challenges there around ensuring that there's a uniform customer experience, about really proving out that business case. And we don't have the reach yet, right? We talked about we can reach about 50% of consumers. And if a biller's sending out lots of bills, they want to be able to reach everyone. So
I see. Yeah. So it's like the Cash App, Venmo, Zelle thing when you're trying to pay people back of here's how I can accept payment. And that's fine for friends, but you can't run a corporate, a small business that way, right?
Right. Yeah. So if I'm a big corporate, I want to send out bills and I want to get to everyone, not just, a small portion of my population. So that problem does exist, but I think that the good news is the ecosystem is maturing. I think that financial institutions are recognizing the benefit of request for payment. We're seeing some pilots in practice. We anticipate adoption accelerating here. And what I think really is key is experimentation, right? We need to start somewhere. We need to run experiments, learn from them. And I think that the lessons learned along the way are going to help pave the way for just more success and adoption in the future here.
Yeah, it's so interesting how important ubiquity is going to be. In 10 years, we should forget that we ever had this conversation, because we will forget that there was this adoption ramp up and the sign, I think about, when did I get my first debit card and when did I get my first credit card, and how important it would have been to just make sure that could be accepted anywhere. Or, when the first time I got a card that didn't charge me foreign transaction fees. So I could use it anywhere, right? The best type of payment is the one that I don't think about. And the worst type of payment is the one that I have to think a lot about, or worry about, and so I do think that there's this, it should just be, and you guys thinking as the rail provider, you won't, it's just the back end, right? You're talking about invoicing. And so some banks will need to come up with an invoice, or some service providers will need to come up with these invoices to just make it very easy to do this and make it very little bank account set up, things like that. And it's just so funny that like these like steps to make something invisible, right? And right now, all of that work is so visible for so many institutions. And it kind of means that, 3 years in, right, 50% of DDA accounts are connected, and maybe like I'm still getting bills in the mail from my dentist, or I write my credit card number on it and be like, wow, I hope no one steals this information. Would have loved to have just gotten like an invoice through my email that you send the account, the appointment reminders from, but like, I guess I don't live in that world. So I can't wait for the in 10 years, hopefully this will it'll be a given that I can pay this way, right? So my final question for you is, and you mentioned the pilot, which is very exciting, but what's next for FedNow and instant payments in general?
Yeah, so our roadmap evolves with the market, right? So we're laser focused on delivering capabilities that remove any barriers and are going to accelerate adoption. So I mentioned the risk mitigation earlier. I really look forward to that tool launching in the spring, and I think that's really going to help drive some send volume. Looking ahead to the future, we're exploring a number of different opportunities to deliver just value within the market through our products. So that could be anything from additional APIs, enhanced reporting. It could be additional information requirements within the message, which I think would really strengthen just information flow and how banks are using that information. There's other fraud controls that we're thinking about as well. And then we're exploring, are there any opportunities beyond domestic payments? So
sure. There's
also a lot of inefficiencies that exist in cross-border payments, right? They're slow, they're costly, there's lack of transparency.
Bernadette, stablecoin's going to solve all of that for us.
So, and that's the other thing. We're thinking about how do instant payments and stablecoins work together, right? And how can they build efficiencies in the payments ecosystem? I talked about the on behalf of capabilities. So we're excited about, more corporates and fintechs leveraging that so that they're able to just offer top-notch instant payments experiences to their customers. And I think there's also, you can expect more industry collaboration. So
sure,
just working to educate or looking to spur just growth and expand instant payments. And I think there's a great path forward where working with the industry, we can turn instant payments, from an emerging technology to an everyday infrastructure like we talked about earlier.
From your lips to God's ears. So thank you so much for speaking to me about this. We don't get new payment forms in the country every other day or every other year. So it's so exciting. And I think, it'll be really interesting to reflect in 10 years and to see, finally when I get to send instant payments and the first person I'll send them to, or the first probably biller that I have to send them to. But thank you so much for sharing with me today about how the Fed is kind of driving payments innovation forward and how, again, technology is changing banking. It's coming to payments. Whether or not banks adopt it, certainly consumers or customers are finding ways to think about that and to accelerate it. And I think it's really awesome that the Fed is involved in that work.
Thanks so much for having me.
Thank you for listening to this episode of Bank Nerd Corner. Stay up to date with news and trends in the bank space by subscribing wherever you get your podcasts. Also, if you love FinTech Takes Banking, please tell a friend. Talk to you next time.